The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
And here to give us a little more insight into the markets is Octavio Marenzi. He is CEO and founder of global capital markets consultancy Opimas. Welcome back, Octavio.
Thank you so much for having me.
Thank you for coming back. You know, as we discussed, right now, of course, the main focus seems to be the Fed and what Powell will say or might not say on Friday in Jackson Hole. But what's the overall view here? I mean, has the world really have the global central bank leaders really been able to, or will they be able to rein in inflation? And if so, or if not, what will that mean overall for the crypto markets?
Well, I think, no, I don't think they have reined in inflation yet. I mean, certainly, you talked about, the US being somewhat broken on what's going on in the rest of the world. Certainly in Europe, inflation has not been reined in at all, and the European Central Bank has done almost nothing so far other than talk about increasing interest rates in the future by some tiny amount. So that is still to come. But I think now, when you think of what Jay Powell is going to talk about on Friday, I think it's going to be a bit of sort of a victory lap, self-congratulatory kind of speech that he's going to give about mission accomplished, how we wrestle down inflation, and look at oil prices, they've come way down, and they're now down lower than they were before the invasion of Ukraine by Russia. And I think he'll make noises in that direction and basically sort of signal that they're going to go a bit soft now on increasing interest rates further. But I think it's a bit of a fool's errand there. I think we're going to be very disappointed ultimately because inflation has not been reined in. We see all sorts of prices going way, way up. I mean, if you look at the price of natural gas now in the US, it's twice where it was just a year ago. And I think most importantly, a factor that's going up are rental prices. Now, housing prices don't factor directly into the consumer price index, but rental prices do, and they do doubly because the value of your house is counted as some sort of rental equivalent that's important. And we're seeing rental prices accelerate in the US. So I think in the next few months, we're going to see inflation be just as high, if not even higher than it has been over the course of the past few readings. And that will force Jay Powell to actually do something more aggressive. I think so far, the interest rate hikes have been fairly tepid. I don't think he's really taken the stance of a very strong inflation fighter in terms of the interest rate increases so far. They've been quite small. I mean, the Fed fund rates are still around 2%. That's a pretty low rate historically. We're not really close to the levels we need to be to rein in inflation.
Now, I haven't checked the Fed funds prediction tool, the markets tool yet, again today, but last I checked, it had 75 basis points as the expected next rate hike. And that's come down from about 1%. So when you say that the Fed is kind of act tepidly when it comes to raising interest rates, still 75 basis points seems fairly, I don't want to say aggressive, but it's definitely more than the 50 basis points or 25 basis points at the start of this whole cycle that people were expecting for these gradual increases in increasing the Fed funds rate. So, I mean, do you think that maybe perhaps there's been a little too much? I'm going to say that you don't think there's been too much pressure on Jay Powell, but it can it be argued that at the very least that 75 basis points, and it seems that that's probably going to be the magic number, is at the very least, can it be argued that look, the guy's doing the best he can without totally wrecking the U.S. economy?
They certainly need to be in slowly, but I think that's just stretching the pain out over a longer gradual period. And there are very significant U.S. economy that have become dependent on very, very cheap credit. And those sections of the economy need to basically be unwound at this stage. Have been artificially kept on life support for now, those things go away. Now, whether that happens very quickly with rapid hikes or slowly over an extended period, I don't think matters that much. They just need to readjust, and any business models that are predicated on having an ultra low interest rate is going to have to rethink that, and that will have to happen sooner or later. But no, I mean, I think you can compare it historically. If you go back to the early 1980s in the US, the kind of interest rate hikes we saw then, rapid succession, we saw 100 basis point increases at single meetings. And I think more recently, talking about the Russian invasion of Ukraine.
I apologize, but those were times where you had persistently long periods of inflation in double digits. So 1%, 1%, 100 basis point hike might seem like it's aggressive now, but relative to the inflation rate, if you were to use, let's say, you're trailing 24 months. 1% now, or 100 basis points now, is pretty strong versus 100 basis points back then when you had 10, 12% inflation over trailing 12 months. Don't you think that at the very least, though, I mean, getting back to this, are we putting too much pressure? And it's hard for me to say this, but do you think that we're putting a little too much pressure on Jay Powell?
I don't think we're putting that much pressure on him just yet. I mean, he's sensing this pressure perhaps politically from various members of the administration, are saying, listen, inflation is becoming a real political liability for us. You need to do something about it. You need to get that under control. If the Democrats are going to stand a chance of staying in control of the House and the Senate after the midterms and of winning the next presidential election, I think they feel a tremendous amount of pressure to get it under control. I think Jay Powell himself does not feel that pressure, that intensity, or that directly. So I think he's happy to have sort of this sort of gradual small increase in interest rates over an extended period of time. You're absolutely right to point out that back in the late 70s, early 80s, inflation rate was higher. But it all depends on how you measure it. There are a number of people who basically claim if we were to measure inflation the same way we did back then, we'd be at a much, much higher rate already. So we'd be exceeding the inflation rate that we saw back in that time period. So it's very, very difficult to compare these things over an extended period of time. But I will say that the Fed has pumped so much money into the system over so many years now that it's hard to see how relatively small increases like this, and I take your point that you don't think the increases are that small, they're actually quite large. But I think you have to think about even larger increases to get inflation under control. And I think we might be entering sort of a period here where the Fed and maybe the ECB says the immediate pressure is off. They'll point at oil prices and petrol prices and say that's more or less under control now, that's coming down. And then in a few months' time, we'll see inflation resurge back as other things start to take over, other components of the CPI start to become more important and really take off there. And then they'll be caught flat-footed and they'll have to increase interest rates even further. Bear in mind, the Fed does not seem to have got anything right so far in this cycle in terms of when inflation hits and whether it's temporary or permanent and how high it gets. All those things it seems to have got wrong.
I'd like you to weigh in on how difficult it is to actually predict those things, even if the Fed might have got it wrong. But at the same time, you kind of alluded to the elections. I want to ask you two specific questions. Number one, if at all there's going to be a mention of crypto in whatever esoteric way, what would it be that the Fed would actually say, the Fed chair would say, when it comes to Friday's speech at 10 a.m.? And secondly, the separation of powers during an election year. Historically, how has that been different from the regular years? Because if you said the Democrats need inflation to come down, is there any chance there could be any influence coming in from Washington, towards what Powell does or what the Fed does?
Well, let me start with the second question first. I mean, I think there is this idea that the Fed is independent and has almost been sort of established as a fourth branch of the US government, which constitutionally was never intended and was never even intended to exist. So, but it has sort of evolved in that direction where Fed independence and central bank independence is considered to be extremely important. At least that is what's said nominally. In reality, the Fed chairman serves after nomination from the president, is subject to confirmation by the Senate. It's very carefully controlled politically. And if really need be, I think the president would actually have the power to actually replace a Fed chairman if they felt it was absolutely necessary to do so. So I don't think there is that real level of independence, and it's always been touted as being such. But I think there is a direct political influence there. The head of the central bank knows that he needs to be renominated by the president or whoever the next president is going to be, and therefore is very eager to make sure that they play along and play ball with that game. So I think this idea of Fed independence is a bit overblown. It's not really that independent. These two branches, if we can even call the Fed a branch of government, are closely aligned with each other and need to be.
Right.
On the other point, in terms of what is Jay Powell likely to say on Friday?
I want you to come back. I apologize. I want you to come and answer that question. But you lay down what is the constitutional relationship between the Fed and the White House, for example. But you didn't kind of get into whether you think this year there will be that kind of a call coming in from somebody like Biden or somebody else saying, look, the elections are around the corner. We need to do something. Do you see that happening?
I suspect it has happened already. I suspect there are people from the administration who are in constant contact with a regular basis. Jay Powell talks to Joe Biden on an occasional basis. They meet with each other, and I'm sure the conversations revolve around that. Now, maybe they don't say it explicitly and directly, but I'm sure Joe Biden asks questions like, well, what are you going to do about inflation? Where's that going to go? And how are you going to get that under control? And we think that's very important. I don't think it's come down to a conversation where Joe Biden says, listen, either you get the inflation rate down below, retain all in Congress, or you're fired. I don't think the conversations have become that stark and that bleak at this stage. But I think that's written between the lines, I think. That's written between the lines, and that's understood, I think.
That would be Trumpian in nature if that were to happen.
Absolutely. So we're completely out of time. So briefly, if you could say, what is it that Powell would actually say about crypto, if at all he would use the word?
I think he's not going to use the word. That would be my prediction. He's going to studiously avoid doing that. Bear in mind, of course, the Fed sees crypto as being a competitor currency, and that is what Bitcoin was designed to do, was compete with the dollar and the euro and the yen and put them out of business, basically. So I don't think he's going to be too keen. But I think, if anything, if he does mention it, it will be sort of cautionary note saying you should be very careful and we need more regulation and it's not ready for prime time and things of that sort. So I think that will be the tone if he says anything about crypto at all, but I doubt he will.